Started recorded this one a little bit late, so just doing that now here. This is FMOC day. We've talked about that a little bit so far. No rate increase announced by the Fed. Jerome Powell spoke. The market responded somewhat pretty bullishly, actually. And now Powell was done speaking, and we're seeing just a little bit of just kind of back and forth. Traders and investors are deciding what to do, and we're just kind of hanging out and taking a look at charts and answering questions. Tony just asked a question about the VWAP. That's this green line here, and he asked, what does it mean when there's a big gap between where the price is and where the VWAP is? Well, just to repeat the answer, because I didn't hit record, the VWAP is the volume weighted average price. So this is the price area where the majority of the orders are coming in on a particular stock are. So it represents an average. And so just visually looking at this, we could see the price is higher than that VWAP, which tells us we're above the average. And averages exist to show us where things have to return to establish some homeostasis, to use a big word, or some normalcy. So we could see we're above that VWAP. But keep in mind, we did have a pretty big sell-off yesterday that occurred. So, what we're watching now is just to see if the market can hold on to the gains that it's made from the FMOC decision, from the Powell press conference, and if it continues to push higher. But everything looks bullish so far. You can see the SPY is up 51 points, the Qs 4.5, the Dow 5, IWM 3.4. So bullish response so far. Other questions that I can help with? And I'll just look at charts while you guys are coming up with things to ask. Let's take a look at, this is really interesting. So let's take a look at SMCI. This is Super Micro Computers. And you could see, yesterday it reported earnings. They had this big gap down, but this is where the power of moving averages come into play. Look how this thing perfectly bounces off that 100 simple moving average on the daily and gets bought right back up. And that is a beautiful hammer candle right there. And so, that could be a bullish indicator that we'll get a little bit of a bounce or a pop out of here. Shout out to Stephanie, who took a trade on SMCI when it got down to that 100, made a nice profit. And hey, Tony, shout out to Tony, because Tony got in on some of this ExxonMobil action on a short, seeing this double top that came in here. If we look at the daily, the double top here at all-time highs, and Tony got in on this on the 3-minute, took it short, and I shorted this one today as well. So Tony, good job on that, man. Let's see. He's going to the chat. Oh, that was yesterday. So yeah, yesterday too. If we go, same thing. You had a bunch of nice moves to the downside here on XOM. So, and XOM has a pattern of when it hits those all-time highs, you could see here, it typically double tops and drops. So I will be continuing to short ExxonMobil down to at least the 100. Now, there's going to be retests that are going to occur in between here, but rest assured, I will be shorting this. I've been shorting it all week, started shorting it last week. There's definitely more room for this to come lower. So definitely keeping an eye on that. Okay. Let's see. What else can I point out here that stands out? So if we take a look at Bitcoin, we can see that Bitcoin is pushing lower. This thing has corrected quite a bit since it hit its all-time high on March 14th. We could just see from its high down to the low that it made today, it's corrected 23.38%. You would have to think that some type of bounce is going to come into play here. We're below the 100, but we're near it. So we'll see if this will be a catch-all to prevent it from dropping further. Not to say that it can't go further, but it looks like it could be in a position to where it's going to bounce. So keep an eye on that, or just being conservative and waiting for it to come down into the 200 before being a buyer on Bitcoin. What else can we take a look at here? So Apple. So this is an interesting one to pay attention to because they're going to report earnings tomorrow, and you could see that they've been in a downtrend for quite some time here after they made an all-time high back in December. And Apple, I mean, this, 17.9%. So it is more than corrected. And you can see the last time it's gotten to this area, it's bounced. So this will be very interesting to watch tomorrow to see if it does get a push out of here. And you're getting some bullishness coming in today. We'll see how that happens. And I think Coinbase, I'm going to say Coin reports today. So no, that's tomorrow. I'm sorry. Coinbase will report tomorrow too. So that's another one. It's close to its 100. I have this line marked on the screen here. There's a bit of support to see if that holds. So far, it is. We did get bought up today. We made a low of 198.39, and Coinbase has corrected 30%. Right. So again, looking for a bounce in all things crypto land. So we'll see. And then just coming back over to the broader markets, let's just go back through. You could see the SPY now is starting to give up those gains. You got a double top coming in here. We're breaking below that neckline right here. And so we could see this thing give back all the gains that, that it made. So this will be interesting to see. Do the bulls come in here to save it, or does it drop? And right now that looks like a decent bearish candle. So we'll keep an eye on that. Probably the same thing you're going to see on the Qs. Yep. There's your double top. There's your neckline. We're below it on the Dow. There's your double top. There's your neckline, double top. So pretty much the same thing across the board. All these gains look like they're coming back. So this could just be profit taking that we're seeing here on all the broader markets. But the bulls will have to step in here soon if they're going to hold on to any of these gains. So from this push up, if we mark the move, let's do this. Let's mark this from 2 o'clock till now, or 2:30 till now, because that's when the press conference started. We moved up $70. So we're almost at that 50% mark. So we're retracing 50%. And it's not looking good. It doesn't look like it's going to hold at this point. We'll see if the bulls bounce it out of there, but that's looking pretty weak sauce. That push higher should have held. The next spot to watch will be this orange line on my screen, which is the 50 EMA. This is we're looking on a 3-minute 50-day exponential moving average. So we are getting a little bit of a bounce here. If it would push below that, it would be the 100. I believe my blue line is my 100. No, that's my 200. And then this turquoise line will be the 100. So a little bit of a bounce coming in. We'll see. I'm not sure that I trust it. What they need to do to bring down inflation, and the two things are not. And that's maybe what you have right now. That's about it. I mean, we're just you got to push. We got to push from the rate decision. You got to push from Powell, and now what we're seeing is a rejection. And if you're a bull, you don't want to see a rejection. You wanted to see this hold, and it does not look like it's holding. And so now, we'll see if it just gives back all these gains at this point. Most people were bearish coming into this meeting because the hopes of rate cuts had been dashed. In terms of that happening, we started the year with market makers pricing in 6 rate cuts, but then it went down to 3, and now we're down to 1 potential rate cut. So that doesn't really give a lot of confidence out there in terms of what's happening in the markets, and that's why we're seeing some selling come into play. here. And so, like I said, if the bulls are gonna, if you're a bull, you have to hold this 50. If you don't, then the win is going to the Bears, and that's what looks like is happening right now. He's giving back all those gains.
Mike,
right?
we talked a lot about how
it is coming on down.
Whether they were entertaining the idea of rate hikes.
And that's typically what happens on these types of days. You know, you'll have people that are just jumping in here, trying to take a trade. They're chasing it. And then what happens? They get trapped and then it gets pushed down. So that's why these aren't great days of trade. It's very risky. You don't want to, really, you don't want to trade. You could watch it, but this isn't trading. This is akin to gambling. So we get clues in terms of where the market's going to go from the rate decisions, from the Powell presser, but these aren't days where you want to trade, especially when this data comes out. All right. And so, Tony, do you have any other questions? If you don't have any questions, I'm going to wrap this up and let you guys get back to your day. I will upload this video for you guys to check out, and we'll be doing this next week again. And I'm not seeing. All right, Tony's good. All right, Tony, well, have a great day. Good luck with those allergies, man. I feel you. They're getting me too. But again, I'll see you guys next week for the next edition of Ask a Trader. Sorry, I started recording a little bit later. And I will talk to you guys next week. Take care.